Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a filing from Faraday Future Intelligent Electric. Get ready because it involves preferred stock, voting rights, and a possible power play. This one is going to be a bit unusual, so buckle up. Faraday Future, an electric vehicle company, filed a Form 8K. This type of form is used to report major events that could be important to investors. Think of it like an uh-oh something happened report. This particular report is all about a new agreement the company made in April of 2025. The main event is a purchase agreement, where Faraday Future sold a single share of a newly created type of stock called Series A preferred stock to someone named Matthias Aid. The price was $100. This might sound strange, but the details of this stock are what make it interesting. This Series A preferred stock comes with some special rights and limitations. It doesn't get dividends and it can't be converted into any other kind of stock. But here's the kicker. It gets 3 billion votes. However, it can only use those votes on one specific issue, which we will talk about soon. The agreement also stipulates that IDIT, the purchaser, has to vote this share in line with how the regular stockholders, those holding Class A and Class B common stock, vote on a specific proposal. This proposal is all about increasing the number of authorized shares. Think of it as a mirror vote, reflecting the will of the common stockholders. But there's a catch. ART doesn't have to vote the Series A preferred stock unless at least 1/3 of all common shareholders actually participate in the vote. This ensures there's a real quorum of stockholders present to be heard. This new stock messes with the voting rights of existing stockholders. Before, to make changes on important matters, you needed the approval of a majority of the common stockholders. Now, you need the approval of a majority of both the common stockholders and this one share of Series A preferred stock. Faraday Future officially created this new Series A preferred stock. In order to do that, they filed something called the Series A Certificate of Designation, which states its rights and limitations. As mentioned before, it cannot be converted into regular stock. It is not entitled to any dividends. Again, this single share has 3 billion votes, which it can only use on that share authorization proposal, and only when at least 1/3 of regular stockholders participate. It votes in proportion to how those other shares actually voted. In case the company goes belly up, the owner of the Series A preferred stock gets $100 before anyone else gets a penny. AT can't sell this share to just anyone without the board's permission, so they have some control over who holds this voting power. The company can buy back the share for $100 whenever it wants, or it automatically gets bought back once the shareholders approve that share authorization proposal we mentioned earlier. This means the company has an escape hatch once the vote is done. This filing includes exhibits including the Certificate of Designation and the Purchase Agreement. These documents provide the legal fine print behind the moves Faraday Future is making. Now let's step back and look at the bigger picture. Why would a company issue a single share of preferred stock with these specific voting rights? Well, it appears Faraday Future is trying to make it easier to get stockholder approval for increasing the number of authorized shares. By issuing this Series A preferred stock, they've created a mechanism to ensure that proposal is more likely to pass without actually giving away real economic power to the holder of the share. It's a way to try and influence the outcome of a vote. This could be seen as a clever move by Faraday Future's management to get what they need, but it also raises some questions about corporate governance. Are they truly acting in the best interests of all stockholders, or are they manipulating the system to push through their own agenda? The risk for Faraday Future is that investors could view this move negatively, seeing it as a sign that management isn't being transparent or fair. This could hurt the stock price and make it harder for the company to raise capital in the future. On the other hand, if the company successfully gets the share authorization proposal approved and uses the additional shares to fuel growth, it could be a win for everyone. Faraday Future is at a crossroads. They have an innovative product, but they also face significant financial challenges. This move with the Series A preferred stock is just one piece of the puzzle, and it remains to be seen whether it will ultimately help or hurt the company's chances of success. Ultimately, what this means for you is that the management of Faraday Future is pulling some strings to get a proposal they want passed. It is important to decide if you are okay with that before investing in the company. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more corporate decoder videos. What do you think of Faraday Future's move? Let me know in the comments below.